Bill here with the Metals Minute. Today is Monday, October 31st, 2022. Well, we have Japan spending record amounts of money to support their currency, over 42 billion, intervening, trying to support the Japanese yen, largely to no avail. It had just a slight effect for a very short time. So we have that happening. And meanwhile, we have further talks of Russia and China combining with a currency plan that is backed with gold. And meanwhile, analysts are saying, oh, the dollar is the best currency and the safest currency. So we have to choose what we believe out there. But we also see premiums on silver continue to be very outlandish compared to the spot price. I think the physical price is probably more realistic about what the real price is for silver. And we see also, if I can get it up there, I'll show you this graph, but as late as September, normally you have the silver contracts, there's maybe a 500% level in paper silver trading compared to the physical silver that's available. It's around 500, between 0 to 1,000%, and it went up to 1,000 in September's numbers. Now we're looking at over 1,500%, highest in record. In other words, that many paper contracts for silver compared to the amount of eligible silver that's available to back those trades. So we have just an incredible amount of paper silver compared to the physical that's available. Over the last 18 months on the COMEX, for example, we're down to 35 million ounces that are registered and available in that category. 18 months ago it was 150 billion. So we are, million rather. We are down a lot. There's a lot of physical silver that's being drained from the COMEX. That's 70–80% drained in the last 18 months. And that's ending up in your vault and our vault and wherever you're taking delivery of your physical silver. Hopefully you're putting some in the Texas Bullion Depository. It's the only state-managed bullion depository in the country, and so hopefully that's where you're storing your metal. It's a safe place, and there's no threat of anybody breaking in your home or holding anyone ransom, that kind of thing, and so that's why we recommend that. But the silver is leaving the hands of the bullion banks and also the vaults of the COMEX. And so we also see that miners are beginning to try themselves, seeing the crazy premium between the spot price, which is set by the bullion banks and that sort of thing, and the literal price for physical metal that people are paying. A lot of the miners are starting to try to go direct to retail. They're trying to sell directly to consumers and bypass the bullion banks with their silver, and that's going to take even more silver off of the markets that are manipulated by the bullion banks and the paper traders. So we're seeing that divergence, we're seeing that decoupling that we've talked about for the last year or two happening between spot price and physical. That looks set to continue. And we have some other news coming out. Probably have a interest rate increase next month. This is the last day of October, so November we'll probably see a 0.75% increase in interest rates, and mortgages are already over 7%. The savings rate has gone way down in relation to the amount of borrowing. People are putting more of their living expenses on credit, and so that's setting up for not a good situation in the markets out there. And so Stay tuned. We'll keep you abreast of everything we see, and we'll see you later this week. Thanks for tuning in. Have a good week.